So as you know, I'm very active on financial markets as well as sports markets, and we've got something really interesting going on in the financial market world, which is Bitcoin. And I thought it'd be interesting to discuss that, to discuss, whether you should be trading Bitcoin, how that links into several elements of trading, including trading on Betfair and sports and financial markets. But yeah, I thought it would be interesting to do a video on joining all of those things together and relating it to the sort of stuff we talk about each week. Please like and comment on the video below. That will allow me to produce better quality videos and more of them in the future. So I thought it would be interesting to talk about Bitcoin because that is all the rage at the moment, but I think it will teach you a lot about the way that the markets work and the way that people work. You could actually do a whole series of videos on Bitcoin because there are so many interesting aspects to it, including the technology and various other elements that sit behind it. But I think that has to be parked almost as a separate video, and we should look at it from a trading perspective in terms of trying to understand what we're looking at here. So the first thing to note is that, obviously I do sports markets and financial markets, and over many years, particularly in the financial markets, I've seen many things come and go. So, mining stocks were very popular at some point and went off to the moon. Biotech, the dot-com boom, you name it, there's always been something that has the flavour of the year, of the month, of the decade, and that's transformative. So I remember doing a presentation way back in 1999 about how the internet would transform everything that people do. And I remember seeing the comments coming back after the presentation because they asked for feedback, and there were only a few people that really got it. Most people completely missed it. But back then it was really easy for me to see the potential for what was about to happen. But the problem is picking a winner is actually a whole different kettle of fish. Trying to identify exactly what is happening and when and who will benefit from that can be quite hard at times. So in my previous job, I used to work in the technology industry, and you'll see how this all dovetails in a minute. But I used to account manage, I pushed, because I could see the potential in the internet, to account manage all of the e-tailers, as we used to call them, and people that were looking to sell stuff online. So I got to understand that industry really well. But again, picking a winner was really hard. So I remember sitting down and having a discussion with Amazon, who were based at Slough then in the UK. I'm not sure where they are now. And meeting up with some of the senior members there who had enormous amounts of shares in Amazon. But at that particular point, it was plummeting to the floor. Now, what actually happened was that through luck or design, obviously Amazon survived that period when it looked like they were about to go bankrupt, and now look at what's happened since then. But you typically find that that's how things happen. New ideas come along, everybody has a go at it, and then something will win through eventually. But actually identifying who that winner will be is actually one of the hardest things you can do. There are loads of things that I correctly predicted, but very few that I successfully invested in. And that's the way that it works. It's sort of that disruptive technology tends to do that. Ideas come forward, lots of them fail, and then one of them finds a way to make it work, and that's the way that it moves on from there. But if you'd have asked me back then, how would Amazon do, you may have heard from me that perhaps I didn't think it would do that well, because they were pretty much out of cash. And at the same time, they had a competitor which everybody has forgotten about in the UK. If you think you know who that competitor was and what they were called, comment below and I'll tell you in another video. But I knew the guy that ran that. I knew the guy that set that up. And he was doing everything right. So I would have probably said at that time that he was the guy that was going to be the Amazon of the UK, effectively. And I almost said the name then. And but it didn't happen. What actually happened was he left it too late to list his company, and it was reasonably highly valued, but it never happened, and then they ran out of money, and then they eventually sold to a retail group. So you look at those moments and you realise that something's happening, but you just may not be able to predict what. And I think that we're sort of at that point a bit with Bitcoin. And the underlying blockchain technology is where it's at. That's the innovation, the thing that is going to change the way a lot of people do. So I've been speaking to people about that technology for quite a few years now and where that's going. So I think that there will be interesting things coming out of it. Will it be Bitcoin? Not so sure, because of course Bitcoin is being positioned as a currency, but the problem is it's the only currency that nobody uses. So if it were a true currency, it would be an exchange of value. But what's actually happened with Bitcoin, where we dovetail into trading on Betfair and trading on financial markets and so on, is that fundamentally, if it were a true currency and an exchange of value, then people would be using it. And the fact is, people did advertise that they would accept Bitcoins, but it's all gone a bit crazy. Because if you do an exchange of value, it has to be stable. So going back years ago, and again, we're not going to elaborate too much on this, but you used to barter. So you sort of say, oh, I need a cow. Can I, how many sheep's for your cow? And eventually the problem was carting around loads of sheep to do that was a bit of a problem. So they invented currency, effectively, an exchange of value. And typically that would be precious metal. But then what happened was that people would get mugged on the way to market, get liberated of their precious metal, and then there was a bit of a problem. And that's how banks were created, because you deposit the money with a banker. It was effectively a warehousing scheme. You would have a warehouse somewhere, you'd deposit your money with them, they'd write you a little note. So one of my hobbies is collecting all of the sort of memorabilia. So I've got a collection of promissory notes, basically, from many, many years ago, which predate cash. And that's just part of my journey of understanding everything. And they would write you a promissory note, which you would then hand to the merchant, who would then go to the bank and then get his gold out of the bank if he required it. Now, that system evolved into the fractional reserve system. Again, I'm not going to go into great depth about fractional reserve banking, but that eventually evolved to what we have here, and eventually we broke the gold standard, so it was no longer linked to precious metal. But again, that's a whole different discussion. But that's where Bitcoin came around, because Bitcoin is an alternative to that, effectively. Or it should be, but nobody accepts it. So there was a great article, I think it was in Bloomberg or the Wall Street Journal, where they did an analysis on companies that did accept Bitcoin or said they accepted it, and whether they accepted it now. And they're all vanishing, basically, because the currency is too volatile. If you have an exchange of value, you really need to know what that value is to make it worthwhile. And the fact is that Bitcoin's doing this. So it's like, yes, I can sell you that car, but it may be 50% more or less in 2 days' time. So you then price that in, and therefore it becomes pointless. And the example of the article that I read had was that you could buy the pizza for $7, or you'd pay somewhere near $50 if you use Bitcoin, because the value was changing around all over the place. Google the Weimar Republic in Germany to see what happens when money loses its value or changes rapidly in price. And that can come through a number of different ways, either printing too much money in inflation, or the fact that there are other issues in there. Again, I'm not going to discuss it in great depth. So what is actually going on with Bitcoin, and how can we parallel it and learn from what we're seeing within the market? Well, first, the reason for going into this discussion about the exchange of value is essentially that's what underpins everything. If I buy a company, it pays me a dividend, so I can value it. If I go out and get some trees, I can burn them or build a house, there's value within that, and that has some economic value. But the interesting thing about Bitcoin is it actually doesn't have any economic value beyond exchanging it with somebody else, and there are very few exchanges going on of significant quantity. But what has happened is it's caught people's imagination. People investing, speculating on Bitcoin, the price is going up, and as a consequence, the fact that people are willing to pay that to exchange a Bitcoin means that people who have Bitcoins are reluctant to exchange them. So we've got two elements going on within the market. We've got what I call the FOMO factor, the fear of missing out. Bitcoin was almost worthless not so long ago. Then it was worth $200, then $1,000, then $10,000. Will it reach $100,000? It wouldn't surprise me if it did do that. So if you know that the price is going up, suddenly the emotion is that you need to get involved, because you looked at it at $500, then you looked at it at $1,000, you thought, no, I'm not getting involved, and now it's 10, and you're thinking, what an idiot. I better do it now before it gets to 50,000. So the FOMO factor is a big driver. It's an emotional factor within a market. And it's the same as, if you see a favourite being backed that's got no form, but it's from a good yard, and you see the money coming for it, then people are tempted to back it, which then other people back it. And seeing other people backing it, other people back it, because it's being backed by other people that backed it when it was being backed. And the whole thing trundles forward from there. So you're effectively seeing the same thing, but on Bitcoin. But of course, on a horse, You know, you've got down to 101 certainty that we'll win the race, and it probably will never get there, but there is no upper limit on Bitcoin. There's no way of sensibly valuing it or making a sensible judgment on value. So it could go astronomical. During the dot-com boom, a friend of mine had a website, and he got it listed on AIM. And on the day it listed on AIM, it was worth £150 million. Now the fact is, it was never worth that because it was generating no revenue. And the fact is, a year later, when it still wasn't generating significant amounts of revenue, the market had revalued it to about 5 million. And I've no idea how much it's worth now, or even if it's still listed. But that tells you that very often the market reaches the point where people are just willing to pay whatever it is, and that's what they call the greater fool theory. It's like, well, I'll buy it because it's going to go up and I can sell it to somebody else. And that's great while the price is going up, but eventually that stops and it goes down in the other direction. I've seen it with mining, biotech, a whole range of different types of industries and technologies. But when the price goes skyrocketing, everybody buys into it with the basis that they'll be able to sell it at a higher price until that stops. And then it goes completely catastrophically into freefall, because then nobody will be willing to buy them off of you. On the way up, nobody wants to sell, and on the way down, nobody wants to buy. So the extremities tend to be pretty severe, but typically you can tend to find that as volatility increases, that gets you more and more certain that what you're seeing is it's purely greed and fear. So you have people wanting to hold it because they think it's worth a higher value, but you also have the other side of the coin, and that people fear missing out. And you see the same in every market. So I can guarantee you, I can't tell you what price it will be or when, but I can guarantee you that it will exceed its true intrinsic value at some point, because it happens in every market. That favourite that's being backed in and backed in and backed in, but has no form, will end up getting backed in too short. But from a trading perspective, of course, if you nip in and out, you can grab some of that value on the way down. The worst thing you can do in any market that's speculative is be the one left holding the baby at the end. If the price on Bitcoin goes to $250,000 and you're the one that buys it at $250,000, and then the market collapses, you're the one that's going to be holding the loss. So yeah, you know, you may want to trade it, but holding it, I think, is potentially quite risky. And when I was talking to friends in the industry, because I came from the technology industry, about Bitcoin ages ago, I've got a couple of friends who are quite senior now, and they're working on related areas within it, such as blockchain type technologies. And you know, you chit chat to everybody, you gradually form an opinion, you understand things from going on there. But one of the weird upshots of, you know, because I thought, do I buy Bitcoin? Well, I can't value it, and it's key to me is that if I ever invest anything, I need to understand what the value is. What is the yield? And Bitcoin yields nothing apart from the ability to sell it to somebody else at a higher price. But a few years ago, I actually was invited by this company to go to Cannes in France for a conference, and this was the opportunity that I found with Bitcoin, or that I think is the biggest opportunity, or has been the biggest tangible opportunity, is that when you mine a Bitcoin, again, I'm not going to describe the process behind that, you have to put a lot of investment into IT technology to be able to do that. And as a consequence, when you're actively pursuing the ability to mine a Bitcoin, it involves a lot of resources. So I just had a thought about it and wondered who's going to be the benefactor from that. And in fact, I came up with the conclusion that it was Nvidia, because Nvidia produce high-end graphics cards, and met up with a friend of mine that used to work there years ago, doesn't work there now. We talked about it, and then I started digging around to look at all of the stuff related to Nvidia. And sure enough, demand is absolutely booming for them at the moment, because people, you know, part of it will be the gaming industry, part of it will be PC and other related industries, but obviously Bitcoin is going to be having a big impact on that. So if you look at the graph of Nvidia and see how their stock price has formed, and you look at the price of Bitcoin, you'll see that they're fairly similar. But of course, with Nvidia, you can do traded options, you can go long and short, you can do all manner of things at relatively tight spreads, and there is an underlying value within there that you can make a reasonable judgment on. So I think looking beyond that top level, that's probably where some of the best plays are within this particular market. But even they will probably get overvalued at some point as people start to understand that there is an opportunity there. But I think the whole Bitcoin cryptocurrency thing is very interesting because it shows in very clear light all of the emotions of trading and the fear, the greed, all of the things I've talked about in some of the other psychology videos. You can see right there now. And what you're tending to find now is more and more people are getting sucked in, which is exactly what you need to push that price up. But eventually it will just go pop, and we'll start to go. I can't tell you when that is, but I can tell you that that is almost certainly going to happen. And you sort of know that we're getting nearer to that phase when people start, who previously did betting or gaming, gambling systems or some other, you know, binary options or whatever, they're all now selling Bitcoin trading systems or Bitcoin syndicates or multi-level marketing things related to Bitcoin and so on and so forth. So you can see that we're reaching that particular stage in the market. In the hype cycle, it will go something like this, where technology is not known and people are investing and not making much money. Then the hype cycle comes in, kicks up here, then it blows off, and then it's at the bottom there that all of the big winners tend to come out of the cycle. So I can give you a great example of this from my own career. I joined an internet service provider in 1996 and they ran out of money in 1999, 1 year before the dot-com boom. If I would have been around and hung around for a little bit longer, I could have ridden that wave. But as it was, I was looking for a job at that particular point. So yeah, you sort of learn from experience that you can't really predict some of these things. You just have to play it safe, as you would do in pretty much any market. So anyway, hope that's been interesting for you, giving you some insight into what I'm looking at on that side of things, and whether you choose to invest in it or not is obviously your decision. We could talk for hours about all of the individual aspects, but maybe leave a comment on the video or visit the forum, because we've got a great thread running on the forum about Bitcoin. You can see all of the discussion that's taken place over a number of years relating to the cryptocurrency market and so on. So check that out as well. Anyhow, hope you found that interesting.